Well, looking at the Saudi market, you have to understand that it has a lot of dynamics. Most importantly is the population. So a lot of the investment strategies focuses on the demographics of the country. 60% of Saudis are below the age of 30, which puts a lot of pressure on a lot of industries, specifically education, healthcare, food and beverage, and other industries. But these are the ones that we see are most important right now, with a lot of pressure on these sectors to start to produce more for a country that's demanding more. So we're pushing ahead with that strategy in certain fronts, and as I mentioned, these sectors. So we're starting with the education, for example. We're moving on to healthcare, food and beverage. We already started with real estate, where we see a huge demand on residential real estate in Saudi. These changes definitely improve the prospects of the industry or the sector itself. But we have to understand the fundamentals behind it. You have a large population, most of it which is young. They're growing to certain ages where they're demanding more of these industries, specifically residential, where there's a large percentage of Saudis who do not own their own homes. So that is a fundamental reason behind the strategy. And the government actions in recent years is just to emphasize the importance of that sector and looking into the fundamentals and understanding them, trying to improve at least the investment prospects into this sector, supporting the Saudi youth with housing loans, for example, soft loans, improving the point system to get these loans earlier rather than later. In the past, people would wait for 10 to 15 years to get the housing loan. Today, it's a lot more faster and immediate. And there are mechanisms to support Saudis as well with housing loans from banks. So a combination of both can be attained today, where it wasn't. A mortgage law was approved to improve the ability of investors and banks to jump into this market more heavily and invest more actively in it. So everything that you see is supported by the fundamentals of the sector. I think it is highly important. We've seen the number of investment funds into the real estate market increasing significantly in the last 2 to 3 years. The volume of investments pouring into real estate development has also increased significantly. And I guess that brings me back to the different aspects of government support into that area, where the Capital Market Authority itself set up the real estate funds regulations back in 2008. And that's when we started our first real estate fund. As you can see, there's fundamental support from the government, from the market itself and the demand, and we see a lot more investment funds coming into the market, specifically in real estate development, more focused on residential. Well, so far from what we've seen from our own experience and from what our research in the market, this ranges between 13 and 15% per annum. Which is not very attractive for a very simple reason. Leveraging in the Saudi market through Saudi banks is not developed for real estate projects as yet. So we're hoping to see more of the commercial banks jumping into leveraging of such investment vehicles, which will improve the returns significantly. This is, of course, another important step, but we see a more cautious capital market authority in their approach to that step. It's a very good first step for them to open up the market for direct investments. We are in need in this capital market for institutional investors, and this is what they're starting with, and we think it's an excellent step. So that should improve also the prospects of the capital market. We're hoping that it will build on the regulatory side certain aspects of transparency and visibility of financial data and information on listed companies. The biggest challenge is the land values. And of course, we understand that in certain, Saudi is a big country, so it's divided into regions. Every region has its own dynamics. So you cannot generalize in Saudi Arabia and say real estate bubble. You may have bubbles in certain regions and in certain cities within regions even. So you cannot predict whether Saudi is going into a real estate bubble. It's too soon to do that. We haven't satisfied the existing demand yet. So long as the demand is there, we are still seeing buyers out there for real estate properties. Now, the pricing of such products has to be reasonable for people to buy. If it's not, we will not see the activity. So, and a correction is necessary in certain cycles in certain sectors, specifically in real estate. But because there's a culture of speculative trading of land plots that has settled in the industry a long time ago, we may feel that there is a certain real estate bubble that people talk about. But it's not in all regions. Within cities, I can tell you that, yes, certain areas within cities can have certain bubbles, but they burst very quickly and they don't have an impact on the industry overall. Well, the real estate definitely is our bread and butter, as I said, but we have proven our management skills in money market. And this is demonstrated by our Itqan Murabahat and Sukuk fund, which is listed on Dahlawi, by the way. The fund has been number one in the Saudi market since May last year. And I don't think anyone will catch up at this stage. Our yield is 50% higher than the number two in the market. So we're very far ahead from everyone else. And this is now being implemented on a managed portfolio basis for certain institutions in the Saudi market. The first of which was signed last year. For the sake of comparison, the Saudi Riyal interest rate today is slightly less than 1%. Our fund pays 2%. Our managed portfolios pays around 3%, and still within the money market. So we have an advantage there. We're playing on that advantage, and we have a lot of institutional investors in the Saudi market with plenty of cash sitting around, and they're unable to manage it properly, or if they place it with banks, they don't get the returns that they should. Well, it's very hard to predict the capital markets. So, and we never ventured into that. Our own reading of the Saudi market is that, and I can tell you from history, we saw 2014 as an overvalued market. And we got out of the market in March 2014. Since then, the market climbed up a little bit, and then a big correction. So we're back into the market. Now we're waiting to see where it will go. But in general, I think if the market continues steadily and more cautiously, it will see fantastic results this year.